What's up, traders? Just here to check in on the big three that reported earnings after the close today. That's going to be Apple, Amazon, and Intel. First up on the chopping block is Apple itself. This is the heaviest weighted component of the S&P 500 as an individual company. And what do we see here? Certainly plenty of overnight volatility unfolding as the earnings announcement came out. We've got a low around 136, a high around 148, over 10 points of range here, just absolutely massive. And ironically, right, it was a big downdraft, I think really in sympathy to the Amazon move. We'll look at that in just a moment. And then it's been bought right back up. So the seller's not really that impressive here down towards the lows. And I do think that this is going to be quite the bullish trade for tomorrow's session just based on a couple of psychological things. So let's talk about them now. Into the close, I think that a majority of people were getting short based on the downdraft that was taking place here, and also the recency bias of Meta earnings being absolute trash. We had Google earnings being trash. We had Microsoft, not doing well at all, as well as Snapchat. Everything has been down in the big tech space so far. And I think people thought status quo. Okay, Apple's probably going to move lower as well. But this is like the black sheep of the market. Remember that Apple, it's the heaviest weighted component for a reason, because it's one of the better companies out there from a cash flow management perspective, primarily is one of those reasons, not only their design and innovation, but just the way that they manage the business, right? So with those things being said, trading inside the prior day's range, you're going to start to make any shorts nervous that maybe this isn't going to break down. Again, no holding power from the shorts down here towards the lows. So opening inside of range strikes me as a bullish indication after what we've seen here on the initial earnings reaction. The next bullish outcome would, of course, be opening on a gap up. If we've got a gap green over red, then now all of the shorts who initiated on today's session anticipating a horrible announcement, now they're all underwater. There's no arguing with that if we're above today's high of day. So an open above 149, green gap over red, certainly would be bullish for a squeeze to the upside. And I would start to target 152, the equal high and daily 50 SMA here that you can see on the left-hand side of the screen. Boom, right there, 152 would be a reasonable target. So opening in range or on a gap up, I would look for some upward activity on Apple during tomorrow's session. If we open on a gap down, I think it'll be a pretty tricky trade to pull off, just noting that we've got incredible amounts of chop in here from in the past, as well as, again, no evidence from the sellers that they're willing to keep it down depressed at these lower prices, right? So far, the sellers have shown that they've failed. Complete failure from the sellers to keep prices lower, right? So to me, it's all kind of stacking up for a bullish reaction here, catching shorts off guard who piled in expecting just a knee-jerk reaction to the downside. They got it, and if you were short shares, maybe you could do something in the post-market there, but any options traders, which again, think about the amount of dollars, the position dollars that options represent, especially expiring tomorrow on a Friday, if those people bail on positions because they're underwater up here, we start to see some squeeze. I think things can get going to the upside here in Apple based on an open in range or on a small gap up, green over red here. So that's Apple in a nutshell. And the two primary scenarios that I'm focusing on will be to the long side. I think downside trades through here will be tricky and tough to pull off. Next up, let's take a look at Amazon, AMZN, ticker there, of course. Last but not least, the mini beast, as we say over on the main channel. And this is where the most damage was done, right? If we look at this chart, it hasn't really recovered nearly to the degree of Apple. Notice that we just went straight down in a vertical fashion here, and there's been some recovery off the lows. This upper wick is a farce. Thinkorswim tends to do that. Apple, we can clearly see the bodies of those candles up there, but when we get just a random wick like this, it's not really something to trust. But regardless, the little dead cat bounce has only taken us to roughly 95, which is still well underneath all of the daily supports that we had. 88 is only coming from the pre-market low here. I just want to quickly take a look at a long weekly chart here to see what we've got for structure underneath us. What you'll notice on the weekly, and why this $100 mark / 102 mark is so important, is because it was a big breakout level from in the past, right? All of this, of course, is overhead supply, but you've got some people with positions from in here, long-term pensions, hedge funds, whatever you've got in here, who are holding Amazon from 2019. Those people are going to start feeling jeopardized as we open around this 95. So you're going to get two schools of thought here inside of Amazon, unlike what we have in Apple, right? You're going to get the crowd who jumps in and starts to say, oh goodness, look at this, it's on sale. Right, I'm going to buy Amazon tomorrow morning because it's on sale on this massive gap down. You're also going to get the crowd who says, oh, we're long from in here. I don't want to risk this going any lower. We're not going to add to the position, and maybe we might even lighten the load just a little bit, just to be mindful of our risk, okay? So you don't know how they're going to operate. I don't know what percentage of people will do what, of course, but those are the two conflicting schools of thought that usually take place on really large gaps, right? And noting that we're gapping into this range as well, I would just say that that's more of an indication that people who have positions here will be feeling like they have to do something, right? So when you get two schools of thought, both in opposing directions, trying to do something on the open, usually you get choppy and sporadic price action. The reason I bring this up is because Amazon, based on the size of this gap, is probably something that I will avoid on tomorrow's morning session. I would say, just as a general rule of thumb, it would not be ideal for a new money short now that this move has been made, right? If we go back to the daily time frame chart and take a quick peek at, what we would consider range rules. Here's a range on the daily time frame chart. When you break a range, you typically look to double it, and oh, would you look at that? Takes us right to 95, where we're currently trading at. So this trade to the downside has been fulfilled, but unfortunately in the after hours session, so you can't take advantage of that breakdown clearly on the tomorrow's open. So with that being said, I don't think it's a new money short here. We're at the target instead of breaking down through an entry point. So to me, Amazon's probably something to avoid tomorrow. If anything, please just don't blindly short this, expecting more disaster to come. I think if anything, there might be some inventory correction to the upside, but because the ranges are so large, for me, it's not something I'll touch. I'll wait for tomorrow's structure to build out, and maybe we'll reevaluate early on in next week's session. We'll, of course, keep you posted on the Amazon technicals in the weekly Watch This video over on the main channel on Sunday. Last but not least, we've got INTC, Intel. We should have done Amazon last but not least, so we could have called it the mini beast. But Intel is next. What do we see here? Intel as well, surprising the market. I would say that this actually isn't too much of a surprise, noting what Meta said in their earnings announcement. Right, Meta is obviously spending a lot on the infrastructure to build up their software for the metaverse, noting that Intel is more of a hardware company, not so much a software company. Look at what's going on, right? It's seeing the opposite effect, noting that there's going to be more spend from Meta on the hardware infrastructure. Intel getting a little bit of a bolster on the earnings announcement, not really puking like the remainder of tech. If you watched NVIDIA this morning as well as AMD, same sort of idea happened there. So overall, just like we talked about in Apple, it's looking like we're getting a gap green over red. Shorts will be disappointed tomorrow morning as long as we open up over 2750. Does look good so far. So again, a lot can happen between now and 9:30. We don't ultimately know where the market will open just yet. We'll of course check in on the pre-market live stream over on the main channel, which is linked down below in the description. But as long as we're here, I would watch for upside reactions inside of Intel. Not only is the stock, being shorted massively, you can just look at the action here, but this is going to turn into a failed bear flag. If we open on the gap up, if we squeeze these folks out, boom, 50 SMA should be your overhead target, which is roughly aligned with this sort of chop zone right around in here, right? The market likes to move through areas of thin structure to where there's congestion. So to me, 29 would be a reasonable upside target. About, what would that be? 1.5 move to the upside. So Intel looking for upside, Apple looking for upside, Amazon's probably a no touch. If Intel opens inside of range here, I still wouldn't be aggressive on the short side. Only short would be a breakdown of this daily support trend line. That would look something like this, right? And that would just be the start of a bear flag breakdown. So a little ways to go for that. That's going to be around 2620. Doesn't look to be the first probable scenario based on where we're trading currently in the post market, but I would just remind you once again that a lot can happen between now and 9:30. So that's going to sum it up for the big three that reported after the close today. We're basically through the heavy hitters of earnings, and the market is faring okay. We'll, of course, check in again tomorrow, pre-market, be there or be square, 8:15 on the main channel. It's linked down below. We'll do a pre-market analysis and run through everything that's important and send you on your way to hopefully round out the week in the green. With that being said, if you enjoyed the video today or learned anything new, let me know in the comment section or by giving the video a thumbs up, and I hope to see you all in tomorrow's live stream.